So we did create this new low. We're going to look for what? And these are the questions you guys want to ask yourself when you're on the other side of the screen. I'm going to look for retracement to a 50% retracement point of interest, okay? Okay. So we did create this new low. We're going to look for what? And these are the questions you guys want to ask yourself when you're on the other side of the screen. I'm going to look for retracement to a 50% retracement point of interest, okay? So once we find our structure and it makes sense, we're looking for a point of interest in the top half. This is 50%, right? In the top half of this range, because price generally moving, especially with this one, goes down 50% retrace, boom, right? So that's what we're doing. So this one's pretty obvious with this beautiful UPA. So this one is a very good example. We're gonna rate right here for unhealthy price action, okay? So step one, structure. Two, look for the retracement. You wanna find a point of interest in the upper 50% because we're selling. If we're buying, it's the bottom 50%. So we have unhealthy price action. What does that mean? We have a large gap where price goes down and does not retrace, right? So expansion, consolidation, expansion, and then we need to come up and react here, okay? So now that we have that, I'm going to clear this. Mind you, if price comes up and comes to here, like if price goes through here and doesn't react, my next POI will be here. I'm quickly going to check. I don't think it's here, but just for example. Now, there's two ways to trade when it comes to a point of interest, like I said. So there's going to be one where price comes up and it does a distro. BC, AR, ST, test, MSAL. UTAD fills the point of interest, major sign of weakness, trading range alignment, and sell, and that's going to have another imbalance here. Or this could already be a redistro, right? Because right now we're selling climax, AR, ST, etc. I don't think it is one because if this is our selling climax, we don't have really any MSAL. We only have here. So let me just undo that. Let me just undo the full example so I don't have to delete it after. But I'm gonna look here and see if we have, I think I'm gonna go down a little bit, 30 minute. Yeah, POI still the same. So on a lower time frame, you could kind of have this as a fill. So let me just see first before I explain, just to make sure. Okay, so this fill, it's not really showing as a fill right now. I want the reaction to be at the exact tip of this, but we don't have a reaction here with any visible candles. But let's have a look regardless. This does look like a clear PS. Okay, so what I'd be looking for is a buying climax, but the buying climax should be filling somewhere. So we can still go have a look there. But let me show you what I'm talking about first. So if this is a buying climax AR, this would be a PS, right? There's no structure, but you can tell it took a pause here. Yes, BCAR. I'm gonna put my trading range on, especially because it's not clear of what's going on. So I can actually measure my weaknesses and UTAGs. Okay. And BCAR nonsense. Body wise, that could be MSAT, but then we also have this. I'm just gonna label this for now. You can always move later. This would be your UT. Comes outside of trading range. This would be your test. Literally touches the trading range and goes back. So that's the difference. Remember, this would not be a UTAD. This would be a second test because you guys, someone may have put a UT and UTAD, but this didn't come outside the trading range, just testing the trading range. So that's a ST. This is a test. PS. Okay. Now, let me just clear this again. Okay, so this actually could be possibly a redistribution where this would be the LPS that I could just sell as is. But for me to take it to that serious level, because it might not be perfect. I'm gonna check the schematic. It might be a PDF schematic. But this trading range alignment would be a heavy confirmation for me. So I'm gonna spend some time here trying to get that before I decide if this is working. So I'm looking for a gap to appear with where this dashed line is. I'm just gonna run through the time frames to make it easy. Go to replay. We have a little bit of order block here though. Remember the very tip of the fill we were doing here, but we also have something here. Let's see. Sometimes when you switch time frames, your trading range could be different, but the AR is still the same. So let's go to 3 minute. So I'm looking here to see if there's any higher UPA. And then I'm gonna go look at the AR to see if I can move it to make it more relevant. So I'm just gonna do that quickly. Because if you don't go through all your time frames, you're gonna miss like 90% of trades because if you're just sticking to these basics, then you're never gonna see anything. So you just type in the number and press enter. So the 11 minute has moved higher, but not completely to the trade range. 13. 4. 13. Okay, so 13, if we put the AR to a body, you can use body or wick, then we kind of get this order block trading range alignment. So that is a major key for me on a 13 minute. Right, order blocks are marked 50% with the line and not a box. So 13, 14. Okay, 14, we're kind of getting a moment right here. Go down a little bit where the AR is. And we're very close to having an imbalance here. It's not an imbalance. It's not trading range alignment. So don't get close confused with is. Don't say it is trading range alignment. Trading range alignment is when it actually is the exact same line, right? As you guys see here, it's literally the same line. It's not two different lines that are close. So this is trading range alignment. The other one is close. So I'm gonna stick with the 13 for now. And I'm gonna look at this. I'm gonna look at the PDF schematic after when my alert goes off, okay? So because I haven't confirmed it with my schematic, which is like number 6, 7, or 8 on our checklist, that should be right in front of you. I'm not gonna put a risk to reward in. I only put a risk to reward on my setups if I actually went through my complete checklist. Risk to reward means I'm willing to set a limit. I'm not willing to set a limit. So mark, I'll be like, schematic confirm. So I could do that now, but I'm just gonna move on just because for live analysis purposes. And I'm just gonna give this a flag because it just tells me that when I come back to the charts, if I go eat and come back, this is why I need to prioritize anyways.